Good evening, everyone, and welcome to this week's training, team training. This week, I'll be focused solely on entries. I wouldn't be doing much trend lines, drawing up trend lines, etc. So if you don't know how to do, how to box in price using the trend lines, please visit one of my previous videos, which I would have released on how to draw up your charts using trend lines, boxing in price, and understanding the direction of the trade. So today we're going to focus on entries and one particular strategy. For this video, the strategy is based on the moving average lines aligned with the MACD. Right, so grab your pens and papers. It's going to get a bit technical. You need to follow with me. So again, the entries strategy is based on the moving average lines aligned with the MACD. Right? So let us go to the charts. All right. So this is USD JPY on the 1 hour time frame, and I want to start with the most recent move. Now, I've drawn up this chart on Sunday, and I've expected based on this flag, especially for the trade to take to the downside. Now, we have the information knowing, okay, well, it's going to go to the downside, based on this impulse move, and then we have the flag, and then we now look for continuation. But the question is, where do we get into the trade? How do I know when I should get into the trade? So using the MACD and the moving average, this is how we will look for entries. So the first thing you want to do is that you want to add 2 moving average lines to your trading view. So I am just going to take these out and do them from scratch. So we're going to go to indicators over here, and then we're going to type in EMA, and you're going to click it twice. Go to settings, change the length to 20. And be sure to change the style as well, because you want to be able to see the line. You want to differentiate which is what. All right. So the second EMA, I'm going to change the length to 35. Style. Remember to change the colors. Right, and click OK. So now we have a 20 moving average line, which we have here in yellow, and a 35 moving average line, which we have here in a type of pink, right? Adding the MACD to our charts, again, we go to indicators, we type MACD. MACD comes up, not MACD strategy, MACD, right? And we click OK. Now the MACD already comes set with what we need. I don't need to change these inputs, but in case yours do not come with these inputs, the fast length is 12, slow length is 26, source is closed, and signal smoothing is 9. So just make sure that yours have the same as mine. Write it down, have a look, and see what yours is telling you. All right. And then we have the style. Good. So what we're going to do now is click OK. And we're looking for our entries. Now remember, after drawing the trend lines, I knew based on this. So first of all, we can tell that this is an uptrend, right? So we draw the trend line from here, carrying it all the way up. We had a couple of touches, right? And then we had a bit of a downtrend here. So this is the first touch, second, and third touch. So all I did was join the trend lines together. Now, we want to participate in this drop, but we don't want to catch it too late, right? So therefore, using the moving average line, right? We can see how the sellers was actually coming down here, but they were struggling. So you would not have known that the flag was finished, that it was completed. What we look for is the crossover of the moving average line. So remember, this yellow one here is the 20 and the pink one is the 35. Now right here, we had a crossover. So the yellow one actually crossed and is now underneath the pink moving average line. Now, we're not just using that for our confirmation, but that is part of our confirmation. The second confirmation now is if you look at the MACD, right? So let's go here where it crossed. 1 second. So if we look at the MACD in this area, right? So now if you look here, we have the cross of the moving average lines here. And if you look at the MACD, right? The MACD also crossed as well. So what you want to look for is the cross of both the moving average line and the MACD, because the MACD can cross in between the trades. That you can look here, right? You can look, follow the cursor with me and see that the MACD crossed here, but the moving average lines didn't, right? So if you was using the MACD alone, you would have sold there, but we didn't get the confirmation in the moving average line. Then over here, moving average line crossed here, but the MACD didn't, right? So what you want is the cross of both the moving average line and the MACD, right? So we have that here. We have the 20 moving average line crossing the 35 moving average line. And then we also have the blue line over here on the MACD crossing with the red line, right? So there and then, that would have been my entry. I would have entered right there, right? That would have been my entry, and it's really, really simple, very easy. Now, what you want to do is after you've gotten your entry, you can then look to enter when the trade has moved back closer to the moving average line. So for example, here, we can see that the trade flagged and actually came close to the moving average line. That could have been your entry for another sell, right? So I just want to make sure you guys understand that. Let's look at another example. Right. So right here, right? So this was a previous trend line that I drew here on AUD USD when it was coming down into a downtrend, right? And what we were looking for, now that it was at a bit of support on this trend line, we were looking for an impulse move to the upside, right? So what would have been our confirmation for this impulse move? So right here, I know it looks very small, but there's a reason why I point this one. So right here, we had a cross on the moving average lines, and we also had a cross here on the MACD in this candle. So both moving average lines, right, and the MACD crossed, and then we had the impulse move, right? We had the impulse move, the MACD. Now notice now the moving average lines, once the impulse move started, the moving average lines expand based on the impulse move. So we know that we are strong in the trend going up, right? Now that would have been our official confirmation. Over here, right over here, because the trade was already in a buy, you wouldn't look for the moving average lines to cross again, right? Because we are already in an uptrend. No, right? So we can see that while the trend was strong, the moving average lines, they started to distance. So they started to grow apart basically. But then when the trend weakened, it was like a rubber band. It got small. So you can see all here, it got small. Now, what we need again for our confirmation that this was going to break our flag, right, is for the MACD now to cross. This is a case where you can actually use the MACD as your indication to jump into the trade, because you can see that the lines in the MACD crossed right there, right? So the lines crossed on this candle. And that would have been our indication to get in for the continuation after the breakout of this flag, right? And then we can see how the moving average lines expanded again. They moved apart from each other, but now look what we have, right? What we have here is that we have the moving average lines crossed. Now, for me personally, I was getting out of this trade as soon as the moving average lines cross, right? So you can do it like that, where you get out of the trade when the moving average lines cross, or you trail your stop loss so that, as the trade then reverses, it knocks you in profit, right? So you could have trailed your stop loss. So for example, when this continued up here, right, you could have set your stop loss very tight under here, right? So that when the trade came back down, it knocked you out, and then you don't have to worry about anything else with the trade. You would have caught your entire profits. So again, I just want to repeat. Let me take off this one. Take off this one, and let's go through it one more time here. Right? So after drawing our trend lines, we notice that we are in a downtrend here. But overall, if we go on the 4-hour time frame, you can see that we were in a major uptrend, right? Everybody sees that we were in a major uptrend starting from here, and the trade took off and came back down to test this trend line. All right, so at this trend line now, while the trade was flagging, we would have want to know what is our entry. So we come down to the 1-hour time frame here, right? Some people look for their entries on the 15-minute, but it depends on how close we are to that time. So even here, so me personally, because it is a trade, it is a long-term trade, or we're looking to catch a very big move, I'd be looking focused on the 1-hour time frame, because you could see even here the moving average lines are kind of tangling up in each other, and we can't really get a clear indication as to when we should jump into the trade, right? So I come on the 1-hour, and I notice over here that the moving average lines cross, and the MACD cross with my moving average line. So you need both confirmations to happen at the same time. Moving average lines cross, MACD cross at the same time. You could have jumped into this trade at the close of that candle. So at the close of the candle where the moving average lines cross and the MACD cross together, right? So for example, it would have been this candle, that green candle there, that small guy. As soon as he closed, jump into the trade. Or you could have set maybe a little buy stop just above him, So let me remove this. You could have set a buy stop above his wick, that little candle, because you already had your confirmations. So which means that when impulse happened, it would have caught you on your way up. You could have done so many different things. You could have set a buy stop at the top of this flag, but some persons are more interested in catching a more precise entry. They want the entry to be very tight so that they can catch the entire move. Then the moving average line crossed with the MACD would have been your perfect entry, right? So we would have entered at the close of this candle. Let me just mark it. So the close of that candle, that green one, and we would have taken this trade and continued our way up into a buy. Now, when it got here, we can see clearly that we have a flag. So you need to be able to identify your flags as well. So we have a flag here. We want to understand, where do we get into the trade next? Now, as I mentioned previously, the trend was already up. We already had the cross in the moving average lines. The moving average lines are not going to cross again because the trade did not go into a sell. It did not go into a downtrend. It was already up. All it did was had an impulse move and a corrective move. So now we're looking for the continuation. Now, in looking for the continuation and the break of the flag, what you look for now is the moving average lines to kind of squeeze. And once you get that squeeze, you wait for the MACD to cross. So we got the cross in the MACD here at this small little candle right here, right? And here. And that would have been your signal to get in for a further buy. You could have entered another position here, right? So you could have entered another position here knowing that we were waiting for the impulse move to break this flag, right? So in this entire move, if you notice, the moving average lines never cross. Moving average lines cross here, I am out of the trade, right? So that could be, for some of you, your strategy using the moving average lines along with the MACD is very simple. Do not complicate it. You're just looking for the lines to cross, right? So guys, it's simple, because I know some of you might come and ask me which line cross where. You just need to identify your 20 moving average line and your 35 moving average line, right? Which I would have color coded. And the MACD is very simple. You just wait for the lines to cross along with the moving average line for your first entry. But if the trend is already happening, if it's already in an uptrend, in this case, note that when we are getting our first correction to have the continuation, you will not have a cross in the moving average line. And the reason for that is because the trend is already up, right? So in this case, you wait for the cross in the MACD, and you know, you can use, even here, you can use the MACD where you can look at the strength of the sellers and the buyers based on here, right? So you can even see here that before the MACD actually crossed, the lines in the MACD actually crossed, the MACD was showing you that the sellers were actually losing their momentum, right? So it's very, very, very simple. I'm going to use one more example for you guys, and then we will close tonight's training. I don't want to keep us here too long. Now, where you don't want to use the MACD nor the moving average lines is in a range, right? You don't want to use these in a range. We already know that with a range, you would use the RSI indicator, and we will do that in another training video. But once you've identified that you're in a range, like what I've identified here, excuse me, Please do not use the MACD, neither the moving average lines, to get into these trades. Why? You will confuse yourself. Two, you would lose money. Right? You will lose money. Good. So, using the moving average lines along with the MACD. So here, if you guys can remember this sell that we had a couple, I think it was about 2 weeks ago or so, on the 15th of November, where we had this impulse move, the correction, and then we had this huge drop that happened based on Brexit news, right? And some of you were actually in this trade around here, where the trade was actually impulsing in both directions, and you probably would have lost money, etc., because you didn't wait for the correction. So we had this impulse move, then we had the correction. So based on this, based on the strategy that I would have taught you, now, when would we have gone into this trade, right? So the first thing is that you have the cross of the moving average lines here at the close of this candle, the cross in the MACD at the same area, right? So let's put it here. MACD and the moving average line crossed here. So you could have used that for your entry. And in this case, if you had done that and you entered this trade at the close of that candle, you could have caught, you know, a good set of pips. In this case, you could have caught 21 pips, right? So right. So basically, what we want to identify is we have the cross in the MACD. We would have gone into the trade. Now, over here, right? Over here, notice what starts to happen with the trade. We start to get cross and tangled up. From the time I see that, I'm out of the trade, right? So even if you would have held this all the way here, waiting for continuation, if you were still holding this order that you would have caught getting in from here, from the time you see the moving average lines cross, MACD start to cross, etc., out the trade, right? You could have used that, or you can trail your stop loss. It's up to you. But I'm giving you a strategy for those who looking for a strategy that will be simple, that will help them. You can use this. So even here, let me look for another pattern. Let's look here. USD MXN. See here. Great. So this is a pattern that I would have identified sometime last week. And what we had here is that we had this as a support line for the trend line, and we moved down here. Now we already knew that the trade was trending up. You can see it here, look. Uptrend, came down. This is where we were. We were looking for the entry here now on this trade. No. What are we looking for? We're looking for the moving average line. So this 20 moving average line to cross with the 35 moving average line. So yes, it broke. It broke here. It broke this flag. But what we want, we just don't want it to break. We need the cross for the confirmation. The cross only came here. When we have this impulse move to the upside, and then we had a small flag, we had the cross right here at the moving average line, right? You had a cross right here. No, in this case, right, it's important that once I have that crossing moving average line, I was jumping in, because we already had the impulse move and we had the correction. So we're just looking now for the continuation of the trade. Now, one thing, and you know, I don't want to go too deep into explaining the MACD and the moving average in this video. I don't want to make it too long for you guys, but I know the question is going to come. So someone might come here, but coach, we had the cross in the moving average line, but we didn't have the cross with the MACD. We already have the information that we're in an uptrend. We have the cross in the moving average line, which would have signaled my buy. But you mentioned in the last two examples that you want both the cross in the MACD and the moving average line. Not all the time. No, you need to understand which line of the MACD needs to cross, right? So in a buy situation, the blue line of the MACD needs to cross over the red line. Right? The blue line of the MACD needs to cross over the red line. Once the blue line is above the red line, we know that the trade is in a buy. Right? So here, my signal would have been the moving average lines crossing. The blue line was still above the red line in the MACD. So in this case, I would have gotten into this trade, right? Still, because we already have information, we know it was an impulse move, we know it was a corrective move. We just want to understand our entries. Enter here. I would have gotten in here for my buy. My stop loss would have been below here, last low, and we could have trailed this all the way up. All the way up. Notice that after the moving average lines crossed here, they never crossed again. They never crossed again, right? They only crossed here. This is where they crossed. This is where they cross. Now, this is just a type of, I would say, a beginner understanding of using this strategy. There will be more videos that I need to come to explain, you know, some other things to look out for the MACD. For example, the candles closing, not the MACD, the moving average lines. For example, the candles closing under the moving average lines, if I should use that as a signal to jump on the trade, etc. We will go through that as in the coming weeks. But right now, I want to give you a simple way of how you can jump into the trade already knowing the direction of the trade, already knowing the pattern that that the flag has just created. All you want now, what you've told me tonight in the group chat, is that you want to know, based on the flag, when should I jump into the trade? And I'm giving you a simple way using the moving average line. Just wait for it to cross. Just wait for it to cross. You need, in a buy situation, for the 20 moving average line, which is in this case the yellow one, to be above the red. With the MACD, you need the blue line to be above the red. Then we know that a buy is, and you know, the trend is trending up, right? So I hope I didn't confuse you guys there. I hope you guys understand. Even if you feel a bit confused, it is so simple. All you need to do is go on to TradingView, add in the moving average lines, add the MACD, and back test it yourself. Look at it and it will come together. It will start to make sense. You know, make sure you draw your trend lines, your impulse and corrective moves, right? And then look, based on the corrective move, what is the moving average lines telling you? What is the MACD telling you? Remember that trading tells a story. And you need to be able to identify this story. So all you need to do is, based on drawing your trend lines, identifying the impulse and the corrective move, right? We know that we don't enter a trade unless it corrects, right? So during the corrective move, where do I jump into the trade? Wait for the cross of both the moving average lines or the MACD, or if we're already trending up, right? Wait for the cross of the MACD or wait for the cross of the moving average line. I hope that makes sense to you guys. I know some of you are right now confused, right? But it's simple. You need to identify what is your 20 moving average line. So in this case, my 20 moving average line is yellow. And what is your 35 moving average line, right? And then identify your MACD lines as well. So you should be able to understand which of the moving average lines need to be above which. So in a buy situation, your 20 moving average line should be above the red one. So if you're looking for a buy and the 20 moving average line is below the 35 moving average line, which in this case is the yellow moving average line below the red moving average line, then my buy is not ready. For my buy to be ready, I need to have that cross. I need to see my 20 moving average line above my red moving average line, which is my 35 moving average line. So guys, I hope you're taking notes about that. And in the sell, I need to see my 20 moving average line cross under my 35 moving average line, which in this case is my yellow moving average line cross under the red moving average line. And the same thing with the MACD. So you need to be able to identify. If you don't understand, don't worry, try to practice it. You don't have to use it straight away. Stay tuned for next week's video and I will go into deeper detail. We will practice it, right? Come up to this week's training and I will go through it as well. We can do it live. But it's very simple. You just need to look at the moving average lines, be able to identify which is which, and understand your MACD lines as well. So you know which needs to be on top of what. All right. So I hope that that cleared it up for you today. If you have any questions, send me a message and I will see you guys next week. Please remember to tune in to my Banking Millions session every Wednesday night on Facebook and Instagram. If you have guests that you want that are interested into trading, forex, etc., this session is for them. Tomorrow I'm going to run through what is forex and the basics of it, and it's going to be absolutely free on my Facebook page. I will share my screen and we will run through what is forex. So if you have interested guests that wants to understand or know what is forex, get them on this call and I will see you there. Thank you guys again for joining me tonight. Take care.